No overnight sales to report today. We did have the export inspection numbers that were released a little over an hour ago. But now the Wall Street Journal has released the early estimates to this Thursday's world supply and demand estimates. And it stacks up like this. First, we'll go to the U.S. corn production numbers. And remember that at one point, USDA was looking for a 97 million acre or bushel crop here. Corn yield is estimated to be 178.5, and the soybean yield is estimated to be at 70. Now, this is the average of the estimates of what traders are thinking going into this particular report. 97 million acres, 15.92 billion bushel by the time it's all said and done. Soybean production, 4.15 billion is the early estimate. We'll see what happens on Thursday. Now remember, the USDA may change and adjust their production and their yields, but they won't change the acres. That report will be coming out later on this month. So let's go to the corn market, and then we're going to get thoughts on all of this with Todd Horwitz. Right now, July corn gaining a little bit of momentum again, up 1.5 at 332 3/4. And the new crop December is up a penny. Over in the soybean market, July down 3 3/4 at 864, off of some of the earlier lows. Chicago wheat down 5 1/4 at 510, so the wheat's still losing a little bit of ground here. Kansas City wheat down a penny now. Same thing. Last half hour we checked, we were kind of mixed. And we're gaining a little bit of strength actually in the spring wheat market, up 1 1/4 at 520. And Todd, what do you think of these markets here today? Is there any more? And I know that you and I have talked a lot about liquidity in the markets. We still have a lot of short positions in the corn market. We're ahead of a report on Thursday. That's usually sometimes, anyway, when we see some adjustments here. But is there any more liquidity in any of these markets than there has been in the past?
Good morning, John. No, not really. I mean, again, we're still in that phase of trying to decipher what's going to happen with the general economy and going forward. And most people are just kind of sitting it out. And I think you can see that the shorts are still a little bit in control, but I think they're slowly losing that power. And, listen, as long as we continue the ascending way that we're going from the lows, I think everything will be fine. I mean, I do think we're going to start to go higher. We've started to reverse some of our positions and look for much higher prices. And again, I don't think it's going to be an explosion up, but I do think that you're going to start to see a steady rally. And again, the faster and the better the economy opens, the more it will alleviate all this oversupply, and it will help in general. And I think that's what we're going to start to see a lot sooner than we think. And I think that's kind of why we see this trajectory right now in the actual charting of these things. You are seeing higher lows, and I mean, soybeans broke out, so they're actually bullish now. And corn's very close. I think wheat's close as well. So to me, I'm looking to be a buyer, and I think they're going higher from here.
What about the crude oil market right now? We're down just $1.41. Is this hurricane or what's left of the hurricane? Is it affecting this energy market, Todd?
No, I don't. Look, I think they got way ahead of themselves, as you and I talked about in the past. And I thought 40 would be solid resistance, and today's high was 40.44 in July. And again, I think that's it for a while. I think there's a greater chance to see 35 than to see 40 again from here. Now, again, that doesn't mean it won't happen, but that's what I'm looking at from my purview, is that it just doesn't look, we get too far ahead. Markets have a tendency to get far ahead of themselves, and then typically what you'll find out is you'll see that they will settle back down to either find a new support level or they'll break down from there. But I would think that crude will still probably have a chance to go higher, but from here I think it goes lower before it goes higher.
Okay, Todd, stay with us, and you do the same thing. We're going to check the silver price, go to a break, and we'll come back and visit with Todd about the livestock trade straight ahead here on the Market Day Report. Out on the feedlot country, it is show list day, and that's when the packers drive to the feedlots, look over any cattle that might be for sale. And so usually we don't see any trade on Mondays. However, last week we did see some cash cattle trade that kicked off on a Monday. I want to go to the June live cattle here first, just to see where we're trading at. We're up 32 right now at 94.22. You go out to October, we're up 12, but those deferred contracts, they're just a little bit weaker. We got some odd spreading going on there, which sometimes can spell, well, a little bit of weakness. The August feeder cattle down 42, so's the September. The October's down 37. So it's overall a quiet day in the cattle industry as far as the futures are going. June lean hogs up 90 at 48.35. July is up 45. And the August is up 15 right now. So hogs pushing a little bit higher, but I do want to go back over here and talk a little bit about this cattle market with Todd Horwitz. Same question. Is there any liquidity in any of the futures that are trading over here for the cattle?
John, I'll tell you, it's kind of the same problem everywhere. There's very little going on. And I mean, the volume is hardly registering, okay? It would be, if this is a heart patient on a monitor, they'd pronounce it dead. I mean, you know, unfortunately, there's very little activity happening right now in these markets, and they're extremely quiet. Now, again, can it change? Yeah, it can change. And I think, you know, again, I think you'll see cattle continue to try to move higher. I think these pullbacks have been very natural. You know, hogs are a little weak again, but they don't announce themselves. They can turn around at any time. But the hogs have been very volatile, especially in these illiquid conditions, because it creates much bigger movement. And when you have those types of moves, the overall swings are bigger than they should be to begin with. So I think we'll start to see that dissipate again. It goes back to the same theory. Markets get open. We get the slaughterhouses back in operation. I know they're having some COVID troubles, plus some other issues going on in there right now. So I think once you get that done, I think it'll start to even out, and we'll start to see some better pricing.
Okay, Todd, thanks a lot. You take care. We'll talk to you again soon. Christina, there's the latest from the market desk.